Good evening, guys. You can see time is around 10. Let's look at today's Nifty 50 as well as Bank Nifty trade analysis. Let's first look into Bank Nifty, guys. You can see there was a lot of selling pressure previously, and there was 3 days of holidays, and you could have expected the market to go down. But what happened is that the market has to target all those sellers. You can see the market gapped up, targeting all those sellers who might have entered here, and as well as entered here. In a single go, the market targeted and even reached the top here. But what happened here is that the market gapped up above the pivot levels, clearly signifying bullishness, consolidated in a sideways manner, and broke towards the upside. So if you can see, this is the consolidation, and which broke the high of this level. So in case if you consider this high to this low over here, you could have targeted all the way to. So consider this high to this low here. This is the consolidation. So you see the common point in this, you could have the common point in this to the common point in this. You could have targeted all the way to 2.68 level here. You can see the market reached all the way to 2.6 level and rallied towards the downside and even broke this level, clearly signifying bearishness, but couldn't cross the VWAP level, clearly showing some kind of support, and the market rallied. And you can see this kind of huge bearish momentum here. So if you consider the common point in this to the common point in this, you can see usually the market might face some sort of resistance here at the 0.5 as well as the 0.6 level. But here you can see the market here. The market clearly broke towards the upside, but couldn't make a higher high here and continued further selling towards the downside. Usually this kind of huge momentum, the market here you can see kind of moved in a very balanced way. The market would have faced rejection from 50 levels and continue aggressively selling towards the downside, even breaking these lows. But what happened is that the market continued further bullish while price taking support from VWAP levels, the day VWAP level, and even reached all the way to this zone. So if you consider this huge selling momentum, and if you try to plot the retracement levels, the common point to this, you can see even the 0.23 level also was being broken towards the upside, but the market couldn't break this high, and it showed here selling pressure here, and again the market retraced and further continued selling. Here, after this huge momentum, you can see clearly market broke even this level here towards the downside, clearly forming a chalk over here. And the last up move before the down move is this last up move, guys, before the down move. So in case if the market sentiment here would have been bearish, guys, the market would have retraced here, broke, and even retraced to the 50 levels of this zone and continued further selling like this. This is how usually the market behaves in case if the market sentiment would have been bearish. But you can see the market clearly broke here with fair value gaps, the 3 candle structure which broke this low and even broke this low with this fair value gap. If you try to plot this fair value gap, guys, and you can see that the market clearly broke towards the downside, and immediately the market retraced towards the upside, even broke this last up candle high, and from the chalk here, the market clearly closed above this zone, here, you can see, and the market retraced this fair value gap. And here you can see clearly the market would have retraced till this level, guys. Immediately after reversing this bearish sentiment, the market would have retraced till this fair value gap zone and continue further bullish. But what happened here is that the market almost touched this zone, guys. Here you can see clearly the market almost touched this zone, and this inverse fair value gap was not being breached. You can see this 9 moving average was acting as support here, and clearly the market broke towards the upside, breaking this high also, clearly signifying bullish momentum. So in case how the market would have behaved is that the market would have continued bearish in case if that sentiment would have been bearish, but you can see immediately the market reversed and the market would have come to this fair value gap zone and continue further bullish pressure. But you can see as the market is clearly very bullish, there was buying pressure was so high that the market didn't even retrace guys towards the downside and continue further bullishness. And with this candle confirmation, you could have easily entered long position here, keeping your stop loss just below that candle. Long position here, keeping your stop loss just below that candle, and you could have targeted this high, or you could have targeted this high. You can see clearly the market came all the way to that high, and this is how you could have targeted it. The first entry was this entry where the price rejected from these levels here, the VWAP level, and you could have targeted all the way to this zone. And this momentum, you could have plotted the retracement of this zone, guys. The last swing over here, the last swing, the low to this high, you could have clearly targeted the 2.68 level. You can see here the 2.6 level over here. This is where you could have targeted 2.6, and the market also came, but here it formed some sort of support. So if you consider this whole thing as one swing, guys, so in this case, to consider this point to this point, you can see the market retraced aggressively, but here it took support from this 0.38 level here, clearly signifying some sort of bullishness. This is a 0.38 level of this whole swing, or if you consider this short swing where it actually broke this high. So in case if you consider this momentum, guys, the common point in this to the common point in this, you can see price taking support from 50 level. So in case if you consider this whole swing as single momentum, and if you try to plot the fib extension levels, the low to the high of this to this zone over here. So let's consider the 0.5 as well as the 0.6 zone. You can see the market here came all the way to the 0.5 as well as the 0.6 zone here, and price wouldn't continue further. Usually when price forms this kind of support, usually the market, in case if the sentiment would have been bullish, the market would have reached the 100% or the 1.68 level. But here you can see the 0.5 as well as 0.6 level acted as resistance and resulted in further continuation of price towards the downside. And here you can see after this huge bullish momentum, it formed a bearish engulfing pattern, clearly signifying bearishness. So, but the market couldn't close below this level, but here it shows some kind of bearishness, and you can see this kind of consolidation. Clearly the market is consolidating in this wedge type of pattern after this huge bearish momentum. So if you consider the common point between this to the common point between this, you can see the market faced rejection from this 0.5 as well as the 0.6 level of that retracement. This is a 50 level retracement, and continued further towards the downside. So in case if you consider this swing momentum, guys, the common point between this to the common point between this to the common point between this common point between this, you could have targeted all the way to the 100%, the 1.68 level, or you can see the market came all the way to 2.6 level. You can see how the market came all the way to 2.6 level here. This is the short scalp where you could have easily taken short position, guys, keeping your stop loss just above that candle or above. After this huge kind of bearish moment, bearish candle, you could have entered position. I have entered my position before this candle formation only, guys, and I made a good profit in this trade. And you can see here as the market reached, even broke this low, and even this fair value gap it reached, you can see the market heading higher. So it went all the way to this zone here, and this was the 0.5 as well as 0.6 zone, clearly signifying this momentum as kind of bullish. But what happened is that after the market reached all the way to this zone, guys, you can see a bearish engulfing candle formed here, which engulfed the previous candle, which is a doji candle, showing the exhaust of bullish momentum. And in case if you plot the fib extension levels, the common point in this to the common point in this to the common point in this, you can see the market came all the way to 100% move here, the 100% move. So in case if you might have entered after this kind of huge bearish candle, so in case if you consider this momentum, guys, if you consider the high to low, this was a 50 level, but here you can see the market clearly broke the 50 level, clearly showing some kind of bullish momentum. But you can see here it formed a bearish engulfing pattern. So in case if the market sentiment would have been bullish, guys, the market wouldn't have broken this high of this candle or mid of this candle, and it would have formed another bearish candle, and price would have headed towards the downside. But here you can see the market after this candle formed a piercing pattern, again formed a doji where price took support here and formed a huge bullish candle here. So if you try to plot the fib extension levels from the common point in this to the common point in this, you could have entered long position somewhere here, and you could have targeted the 100%. This is another short scalp where you could have easily taken, guys. But in case if the market sentiment would have been bullish, the market would have continued further bullishness. And the last support is this zone, guys. This is the last support where the price took here and tried to break this high also. But here you can see this zone acted as a resistance here, the 0.5 plus 0.6 zone, and here it found a bearish engulfing pattern here, clearly showing bearish momentum. And the confluence was the previous bearish engulfing candle here, and engulfing candle here, and this zone is clearly showing some kind of huge supply zone, and you can see price clearly heading towards the downside. And from here the price rallied all the way here and even broke this low, clearly forming a chalk formation here. This is a clear chalk, guys. And if you consider this huge swing, you can see clearly if you try to plot the fib extinction levels, fib levels here, the common point in this to the common point in this. You can see here the market here didn't show good momentum, guys. You can see here. Here you can see the four bottoms here forming, breaking this low, breaking this low, breaking this low, forming a lower lows here. And you can see with this huge momentum candle, the market rallied all the way and formed a chalk here. But here you can see clearly the market formed a sort of chalk. And this was quite unexpected, as you can see clearly that after this kind of reversal here, you can see this kind of reversal pattern over here. This is a pattern over here. This is, you can see, after this huge momentum, the market retraced and broke towards the downside. Immediately after this, the market might have retraced to this 50 levels and continued further selling pressure, but this momentum showed clear sign of bullishness, guys. And the market clearly formed a chalk here and showing a demand over here. You can see this is the demand zone here. But here you can see clearly the market even broke the demand zone and reached all the way to these order block levels. You can see this is the 1 minute order block, guys. You can see here the market always came all the way here, took support from this 1 minute order block, and here it came to this zone over here. This is another order block level, guys. So you can see this is another order block over here where price took support here, but here you can see the market would have continued further bullish, but here it formed another piercing pattern and came all the way to this zone. And here the market sentiment would have been very strong, guys, in case if the market would have continued further selling. But to target all the sellers, the market again reversed back and even broke this high and again retraced towards the downside. I think there is no more sellers here, guys. I think the people who might have sold here might have taken out, and only there might be buyers who might have entered here or towards the day. So as of tomorrow, the market might target all those seller buyers and the market might gap down and continue further bearish momentum. So this is what I'm expecting, because you can see in case if the market would have continued further here and continued further bearishness, there would have been a lot of new sellers entering the market. But with this huge momentum towards the upside, guys, clearly all sellers might have been gone and the market targeted all those sellers here and sellers here also. With this huge rally towards this kind of huge bullish momentum, guys, a lot of sellers who might have entered might have squared off their positions and might have exited. And after this, the market grabbed all those liquidity above these zones and further continuation of momentum towards the downside. And here you can see after this kind of huge bearish momentum, the market formed another pattern over here. This is the pattern over here, as you can see clearly how a pattern formed over here. This is a wedge kind of pattern where after this kind of huge bullish momentum, the market took support. If you try to put a component in this, took support from this 50 levels over here. So if you try to plot the fib levels over here, you can see price taking support from this and rejecting price over here. So in case if you try to plot the fib extinction levels of this momentum, the common point between this to the common point between this to the common point between this, you could have targeted the 1.68 level or the 2.68 level, or you could have targeted all the way to this zone. But in case if you plot the another fib extinction levels, the common point between this to the common point between this to the common point between this, you can see the market rallied all the way. Market rallied all the way. You can see the 100% move you could have taken. The swing of this kind you could have taken, and this would have been the 100% move. The 100% move over here, or you could have targeted this swing structure over here, the 2.6%. This is where you could have targeted the 2.36 level. This is where you could have targeted. After this kind of huge bearish bullish candle, you can see this kind of reversal, guys. This is clear reversal. As you can see, this is a very balanced move with no fair value gaps, no imbalance. You can see this kind of pattern was here, and after this kind of huge momentum, you can see if you consider this swing over here, the common point between this, the common point between this to the common point between this, you can see the price rejecting from the 0.38 level here. This is where you could have seen this rejection and this formation of this huge bullish candle over here. 0.38 level, and you could have entered long position after this kind of cattle and keeping your stop losses below that and targeting all the way to 100% more, or you could have targeted this high or this fair value gaps, or you could have seen this kind of momentum. You could have exited your position, or you could have entered here itself after forming this kind of pattern and entered long position, and you could have holded on to your trade as long as the trade is moving in your favor. You could have targeted all the way to that zone, guys. This is how you could have easily made a decent amount of profit. And here you can see the market here kind of retraced, and here it took some kind of support of these levels and continued further, but here it couldn't break high and broke towards the downside, clearly signifying bearishness, and it even broke this low with this huge momentum. And if you consider this order block levels here, this is the order block level, but here you can see the market broke this high, but again formed a piercing pattern and continued further selling towards the downside. But here there is no clear price action, guys. But here, you can see here how the market behaved. Here till here the market sentiment is very bearish, so the market would have continued further. But you can see this is a clear 1 minute order block, guys. This was 1 minute order block. Once if this order block has been mitigated, it doesn't hold any value. But here you can see this order block level is clearly broken. But here the continuation of price didn't happen, guys. You can see in case of the market sentiment would have been bearish, guys, the market would have continued further selling. But here you can see the market here found a bullish piercing or a bullish engulfing pattern here and consolidated in a wedge type of pattern like this, which clearly signifies bullishness, guys. So you could have entered a long position here itself where price is rejecting to this levels and continued towards the upside, and you could have made a decent amount of profit. This is about my Bank Nifty trade analysis, guys. You can see this beautiful trade setup where price rejecting from the VWAP levels. This is a day VWAP level. You can see how the price is rejecting here. And if you try to plot the retracement levels, the 2.36 level, and price took support from this 21 moving average as well as VWAP level. After this kind of huge bearish momentum, you could have drawn the 50 levels of 0.38 levels. The price might have faced some sort of rejection and continued further selling towards the downside. But you can see the market targeted all those sellers who might have entered here, and you can see who might even sold here. You're expecting the market to break. You can see the market targeted all and continued further bullishness. But here, after grabbing all this liquidity again, the market initiated sellers to enter market, expecting the market to go towards the downside. But here you can see, after this kind of huge bearish momentum, the market again reversed here, targeting all those sellers who might have here, and this huge momentum, all those sellers might have been stopped out. And you can see clearly the market rallied all the way, breaking this high as well. And again, here it is a 0.5 as well as 0.6 zone. The market found a very engulfing pattern, and here consolidated below the 50 levels, and then it rallied all the way to this level. And again, the market targeted all those sellers here with this momentum, and initiated buyers again continued further selling. I think this is just a pure trap market, guys. Market is trying to trap all those buyers when moving in one direction and initiating new buyers to enter the market and targeting all those buyers by moving in quite contrast opposite direction and initiating sellers to enter the market and trying to move in opposite direction. This is why this is called a trap market. Especially people with weak-heartedness should never enter such kind of market, because this is just a trap market. You can see how the price consolidating, moving up, down, up, down, up, down, up, down. I think you should be always be careful, and we should trade with a very fixed amount of stop loss size only then, and pure price action as far as smart money concepts. With only this kind of knowledge only you can be able to trade this, or else it's very difficult to trade this kind of markets. So let's look at into Nifty 50 trade analysis. In Nifty 50 you can see this is the mid of the first candle, guys. This is the pivot levels, the gray color zone over here. This is the mid of the first candle. This is the 5-minute zone. So you can see the market found a huge bullish candle here, and which broke the 921 moving average as well as the VWAP level, daily VWAP level, as well as the pivot levels. You can see with this huge bullish momentum, the market broke everything towards the upside, guys, clearly signifying some kind of bullishness. So you could have entered after this kind of huge bullish momentum and targeting this high, guy. This is where you could have easily targeted this swing high over here, or the order block level here. You can see the market broke this level and showed some kind of bullish momentum, expecting the market might continue further bullishness. But what happened here is that after the break of that, market swept that and immediately retraced back to that zone, guys, clearly trapping buyers who had entered here with this momentum. And you could have easily enter long position somewhere here guys, and price is consolidating in a sideways manner, and you could have targeted all the way to the swing over here. This is one momentum where you could have easily targeted when price is trading above the 9 as well as 21 moving average. And you can see after this kind of huge bullish momentum guys, the last support zone is this zone. So in case if the market breaks this zone, we look for bearish momentum. You can see the market clearly formed a bearish kind of movement because it moved towards the downside. So, and again it clearly continued further towards the downside where it broke this low as well. So if you consider this high to low, the common point in this to the common point in this, you can see the market here faced rejection from the 0.5 as well as the 0.6 level here. This is the 50 level. So you can see the 50 level, and again the market here going to cause this higher high and from the bearish engulfing pattern. You can see this kind of bearish candle guys, clearly signifying some kind of bearishness, and the market even closed bearish engulfing pattern. And you can see if you consider this momentum guys, the high to low here which even broke this level but didn't close. You can see this kind of rounding top bottom and a pattern forming here, clearly signifying some sort of bearishness. Or when you could have spotted this one candle breaking both 9 as well as 21 moving average, this candle guys which broke 9 as well as 21 moving average towards the downside, you could have entered short position, expect keeping your stop loss just above that candle itself, and keeping your stop loss just above that candle and targeting all the way towards this swing guys. You can see as long as after this kind of momentum itself, you could have easily entered or you could have kept your position. But in case if you try to plot the fib extension levels, so if you try to plot the common point in this, to the common point in this, to the common point in this, you can see the 100% 1.68, or the price came all the way to 3.68 levels. Is here it came, and you can see some kind of pattern here, clearly signifying some kind of bullishness. You can see this kind of pattern guys here, clearly not showing huge momentum like this where the price is consolidating. You could have easily entered, exited. This is this 3.68 level where you could have easily targeted. This is where you could have easily targeted your trade. You can see how the market rallied all the way towards the downside. And you can see after this kind of huge bullish momentum, you could have exited your position. And you can see this kind of momentum down guys. You can see after this kind of huge momentum towards the upside where it broke the 20 moving average, the 9 as well as the 21 moving average, and the price is consolidating above that zone. So in case if you would have entered this position, you could have targeted this high also. But you can see clearly again after this huge swing momentum guys, if you consider this swing over here, you can see the market here faced rejection from the 0.5 as well as the 0.6 level and continued further selling towards the downside. This is a 350 level, but here you can see this kind of momentum guys, when compared to this huge bullish momentum, it showed some kind of balanced move with no clear sign of bearishness. You can see this bullish momentum with the price, but you can see this kind of retracement here. Even though this huge retracement, this kind of bearish sentiment was very strong, but here you can see there isn't much bearish momentum. As you can see, the market rallied here with where it couldn't even break this low also with this huge impulsive momentum. Again the market retraced back, and again with this momentum also you can see there was only fair value gap here only, but there wasn't strong momentum guys. And you can see this candle which broke the 9 as well as 21 moving average, this 200 moving average with a solid Marubosa candle. You could have easily entered long position here guys, keeping your stop loss just below that candle itself. And you can see this candle which broke 9 as 21 moving average. This candle also broke the 9 as 21 moving average. You can consider this candle also which broke 9 and 21 moving average guys. If you might have entered short position, you could have made a profit here. But it's very important that we should see some kind of pattern formation before the actual momentum. You can see the market rallied up and formed a pattern over here. This is the wedge pattern over here where you can see this kind of pattern guys, and clearly showing some kind of bullishness. So in case if you try to plot the fib extension levels, the common point between this to the common point between this to the common point between this, so you could have targeted all the way to this high, or you could have targeted this fair value gaps or the order block level if you consider. So you could have considered all the way to this zone guys. This is where you could have easily exited your position, or this with huge momentum also you could have kept it like this. This is where the market rallied, and you can see after this the market faced rejection from this level. So if you consider this swing momentum guys, so if you try to plot the retracement levels, the common point between this, you can see this is the last up move guys before the swing momentum. You can see the market facing rejection from 0.6 So 2-3 levels, and you can see the market rallied all the way towards the downside. But if you consider this swing momentum, guys, the count point in this to the count point in this, here also you can see the 0.3 level. It found a bearish engulfing pattern, and after this kind of huge bearish momentum, you can see price is consolidating below the daily rep level as well as the F50 levels of this zone. So if you consider this momentum here, the impulsive momentum from this high to this low, you can see the price is consolidating this 50 levels, the 0.5 as well as the 0. This is the 50 levels. So if you consider the count point between this to the count point between this to the count point between this, you could have considered all the way to 4.23 levels. You can see how the market came all the way to the 5-minute zone. This is where you could have exited your position, guys. The short position here, keeping your stop loss just above the candle and targeting all the way towards the downside. This is where you could have easily targeted. And again, you can see the market consolidating in a sideways, and clearly this candle which broke the 9 as well as 21 moving average towards the upside. So in case if you might have entered a long position, keeping your stop loss below that candle itself, and you could have targeted this high, guys. This is where you could have targeted. Only on this high, you can see the market rally all the way. So in case if you try to plot the anchor levels somewhere the below low of this candle, you can see here it came and it took support here and continued further. So you could have just hold it on to your trade all the way here. So this is about Nifty 50, guys. You can see how the market behaved. This was a huge risk to reward ratio, but it's worth trading, guys. You can see how the market behaved. I will explain you once more. You can see clearly that this huge bullish candle, guys, as the market opened, it broke the 200 moving average, the 9 plus 21 moving average, and continued further bullish, and even broke the VWAP levels, consolidated above everything, the 921 moving average, 100 as well as the VWAP levels. So you could have entered long position, keeping your stop losses below the VWAP as well as the zone, and somewhere between this zone, expecting the market to go further. But you can see the market rallied all the way, and even broke yesterday's high also. You can see this is yesterday's high level, guys. Very clearly broke that level with huge momentum and trapped all those buyers who might have seen this kind of breakout, expecting the market to go further bullish. And you can see the market retraced back and couldn't cross the 50 levels of this impulsive momentum, and again clearly broke this low also, and it formed a pattern over here, and this candle which broke the 921 moving average here, and you could have targeted all the way to 3.68 level here, and here also it found a bullish engulfing pattern as well as broke the 921 as well as 20 moving average. You could have entered here, and here with this candle it broke the 9 as well 21 moving average. A pattern also found here, the 50 levels here, and previous variations over here. And here after this kind of huge selling momentum, the market consolidated, and the market would have continued further selling towards the downside. But you can see with this huge momentum, it changed the market sentiment from bearish to bullish, and the market consolidating after this kind of huge bullish momentum, where you could have entered long position, targeting this high or this high, and you could have easily targeted all the way to this zone, guys. This is about my Nifty 50 trade analysis, guys. So in Nifty 50, the price action is mainly based upon the candlestick formation, guys, the candlestick psychology. So it's better to learn about candlestick psychology. I will recommend you Steve Nissen's candlestick book and Japanese candlestick. So it will be helpful for you to learn some basics about candlestick psychology, and in confluence with a little bit of pattern formations, price action, I think it will be helpful for you to make trading decisions, and with a very small risk to reward ratio, you'll be able to benefit and trade, guys. Thank you, guys. In case if you find my videos helpful, please like, share and comment, and share with your friends and family members, and keep supporting the channel. Thank you, guys.